Okay, hello everyone. It's the moment you've all been waiting for. Candle framing. Okay. An overwhelmingly simple and powerful concept. Strap in, folks, because if you lack an edge in the market, I'm about to give you it. We're going to predict or frame the next high time frame candle using a few very simple concepts. Okay. First of all, candle closures in reference to the previous candle. I'm going to call this continuation. I was open to new words for this, but I'm just going to call it continuation. We'll go over that in a minute. EBP, which was our previous educational session, so you should be familiar with that. If you're not, go into the educational library and find the recording and find the educational documents as well. We've also got internal to external liquidity rotations, and we've got probabilities. Okay, candle stats, a true statistical edge. All right, so as always, we want to stick to the clear and obvious signals from the market, but once you get the hang of this, you will see the possibilities open up as we have a reliable bias. All right, so let's get started. Starting out with candle closures, or continuation candles as we're going to call them. Easy enough. I hate when it does that. Here we've got a close above the previous day's high. Okay, so this is what I mean by candle closures or continuation candles. So the bias here, or the expectation for the next candle, the candle we're framing, is going to be a bullish candle. We're expecting that high to be taken out. Okay, indeed it does. Same thing happens. We close above the high. What do we expect? We expect the high to be taken out. Okay, same thing happens. What do we expect? We expect the high to be taken out. Okay, so that's as simple as it gets. Okay, so scroll down. So this is so simple, it's almost hard to believe, but just look at it from this perspective. So in the chat the other day, sorry for using you as an example, Jeff, but Jeff asked me a question about why I was so confident in my draw on liquidity and why I wasn't really looking at any weakness around previous week high. And a really, really simple answer, and it's kind of in line with this. It's like, just look at the hourly candles. Like, just look how we're closing above each candle high. Like, yeah, you get a little bit of pullback here, but it's just up, 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 up. You know what I mean? And it's just a continuation candle. It's just what we expect. We expect the high to be taken if we've closed above the previous candle's high. Okay. So the next thing we're going to look at is internal, external, which is obviously a concept I've been talking about since the very beginning. And here we've just got a very simple example here. So we've got this big internal bearish gap here, internal liquidity. So we're expecting that internal to external rotation. Okay. We've had a sweep and a closure back inside the previous day. So you can see we haven't closed above the previous day. We did on this day, we closed above, so we took the high. Okay. So what else? What other context have we got? We've also got this naked daily gap. So, we go into the draws and liquidity module. We are expecting that gap to be taken, especially considering we've just closed back inside the previous day's range. Okay. So where would we expect price to go next? So we're framing the next candle, and I'm looking at it and I'm saying, are we going to go to the high or are we going to go to the low? The answer is probably going to be the low. And indeed, that's what we do. Okay. So now looking at it, this context, where would we expect price to go next? What was be the next candle? Would we take this candle's high or would we take this candle's low in the next candle? You're probably going to say low because we've got this inversion here. We've got this internal to external, but we've also closed below the low of the previous candle. Okay. And again, are we expecting this candle's high or this candle's low to be taken next? Are we expecting this candle's high or this candle's low to be taken next? Okay, you're starting to catch my drift. All right, so this is just a really, really simple idea. We're just using these continuation candles. We're just expecting the low to be taken if we close outside the previous candle's range. We close below the low of the previous candle, we expect continuation. Okay, these are continuation candles. All right, so we're going to do a little quiz, and I am going to have to flick over to the chat, which I had to mute, but here we go. Now, you guys, you're going to play the game. So looking at this one right here, higher or lower? So this is a bit trickier. You're all saying higher? Think about it. A little bit trickier, this one. Would you say that's what would you say is more prevalent in this case here? Look to the left. Okay. The answer is lower. Internal to external rotation. Okay. That was a little bit trickier, that one. Okay. So like I said at the beginning, really we want to gravitate towards the real super clear and obvious examples. Okay. So what about this example? Higher or lower? Yeah, this one's super easy. Okay, lower. So in this case, we had a strong displacing candle closing below the low of the previous candle. So the bias was a new low. Okay, now what about this? Higher or lower? Would you expect this candle high or this candle low? Okay, people saying high. I'm not going to ignore Kai. Higher or lower? Higher. Because we had that naked 4-hour internal liquidity and we had close back inside the previous candle's range. Okay, so can you see how we're using like an accompaniment? How do I say that? We're using like a combination of internal to external rotations, and we're using candle closures or continuation candles to frame where the logical destination is for the next candle. Okay, so we're just framing the next candle. All right, so that's the logic. Okay, and yeah, context. So next steps. Okay, we've framed a candle. We feel like we know what to expect next. Now what? Okay, so I'm going to quickly go over time frame alignments. Okay, so we utilize CISD with time frame alignments. So if you're looking for a, if you're framing a 4-hour candle, you want to find 15-minute CISDs. Okay, if you're framing a 1-hour candle, you're looking for 5-minute CISDs. If you're framing a daily candle, you're looking for a 1-hour CISD. Okay, so it's important to use the accompanying time frame in order to distinguish when that move is officially, change direction, change in state of delivery. All right. So I'll just show you a really cool example. Obviously, that was this last chart there, and you can see this was a 4-hour. You can see you get that 15-minute CISD there, and you get that 15-minute CISD there. So you can see there's the 4-hour candles on the right. These are the 15-minute candles here. So we're using aligned time frames. Okay. So really, really nice example. We talked about this yesterday. So change in state of delivery is a core method of finding when our candles may have begun to turn. Quick reminder of what this looks like with a great example from the TradeFi chat. So here was a simple 1-hour bias with a 5-minute CISD. So if you have a look at this, you can see it pretty clearly. There's closures below the 1-hour candles, so we're expecting continuation candles, right? And you can see this is a really, really nice example there where you get that 5-minute CISD. Okay, if you're not sure what CISD is, again, there's a module on this. I'll link it at the bottom of this document, so you'll be able to go and watch that again. But essentially what you're looking for is a series of up close candles and then a down close candle that closes below the open of that series. Okay, so in this example, here we have the 10 a.m. 1-hour candle closing below 9 a.m. Okay, so this was the 10 a.m. candle closing below 9 a.m. Okay, so our expectation is that we're going to continue and take the low. Okay, now, therefore, so 10 a.m. closes below 9 a.m. Okay, so we're framing the logical continuation, we're framing the new low. Okay, so from 11 a.m., we can therefore look for the 10 a.m. low. Okay, so here's your 10 a.m. low. there's your 11 a.m. open, you get the CISD, and at that point, you can then expect that low to be taken, okay? And you do actually have a 67% probability, all right? So I will talk about that more in a second on probability, but essentially this trade right here, where I've marked out entry, has a 67% probability. So 11 a.m. opens and we begin to move up in a series of bullish candles before a rejection at 10 a.m. opening price, which is also a 4-hour open, okay? This causes CISD and creates a bearish gap, okay? This is our signal that the wick of 11 a.m. bearish candle has been formed, okay? So therefore we can now have a high probability short opportunity in which we can expect bearish gaps to hold and to deliver to new lows, okay? So when you see this blue line here and we go up and then we create that CISD, can you see how that has created our wick here? So this is our open, this is our high, and this is our low, and that's our close, okay? I'll show you a little bit more on that now. Also, a little shout out to Bernsey for taking this and running with it a little bit, just based upon the small amount of information I gave. You can see here, Bernsey's marked out the CISDs of these candles. You can see the continuation of these hourly candles, and he's marking out the CISD every time. Okay, so you can just see how you're able to jump in on a continuation, so a really aggressive move here. Really, really nice. Shout out to Bernsey for that, who managed to up his P&L for the day to $1,000 as well. Really, really cool. So in terms of being part of the wick and, you know, being able to utilize this, we're going to exercise a principle called power of three. Okay, so what we're looking at here is when we're framing a bullish candle, we're looking to be part of that wick. Okay, because if we can be part of that wick, we're essentially getting the maximum risk to reward. So if we look for long entries below opening prices or delivering from opening prices, and we're seeing those CISDs, we're seeing those inversions, okay? So you get that open, you get that low, and then we're looking to be part of that expansion before we eventually take our target. So you can see here we had a bullish candle that closed above a bearish candle, so we're expecting that continuation. We're expecting this high to be taken out. So once we get the open, we get the low, we want to be part of that wick that eventually drives the expansion towards the high. Okay, so we're part of that. Okay, so look for inversions or CISDs from opening price. Below for longs, above for shorts. Be in the wick for maximum risk to reward. Okay, a cool little example here. You can see these are candles on the side, 4-hour candles, and you can see these white zones. These are your wicks. Okay, so you can see being part of the wicks, that is like the maximum opportunity for longs. So what we'll do next is we'll move on to probabilities. Okay, so this is amazing. This is trading with an edge. Okay, so you hear the term high probability setup, but few can quantify it. That's what we're going to achieve. Okay, so one of the things I love about this way of reading price is that we can state with cold hard data the percentage probability whether we take a high or we take a low. Okay, this can breed major confidence when trading, and most importantly, it can keep you away from taking trades in a low probability environment. Okay, you know, I always say this, it's not about the trades you do take, it's about the trades you don't take that will make you successful. Okay, so you're able to harness these probabilities and apply them to a high probability environment and avoid those low probability environments. Okay, so by utilizing these probabilities, we can put ourselves in a high probability environment and trade with that bias. Okay, ignoring opposing signals that are low probability. This is a true edge because you know, given a large enough sample size, you will be right more than you are wrong. This is the very essence of a successful trading strategy. The outcome is out of your control, but the probabilities are in your favor. Okay, it's your job to execute. Look, pro tip, filter your inversion trades through high probability environments. So candle closures outside the previous candle range. Okay, so continuation candles, what do those probabilities look like? So as we know, when framing a candle, if we close outside the previous candle's range, we expect the next candle to continue with that bias. So bullish if closed above previous candle high, bearish if closed below previous candle low. And thanks to Kai, we actually have some stats for these two. So this is the daily statistics for NQ. So in 6,500 bars, we've got 3,300 bullish examples, and we've got 1,400 bearish examples. That tells you quite a lot about NQ, doesn't it? It's quite bullish. So in an instance where you have that continuation candle, you have that close above the high, you've got a 79% probability that the following candle will continue higher. Okay. You've also got the bearish case as well of 70%. Okay. So therefore, given this scenario, you have a 70 to 80% probability bias headed into the trading day. All right. And it's just another little example. See, closing above the high, closing above the high, closing above the high, closing above the high. It's such an easy way to frame a bias. Okay. So higher probability bias. So given that either the low or high has already been taken, there is a strong probability for the remainder of that candle we will not sweep the other side. So this is another great addition to our probability stack. By focusing on the low probability of price sweeping both sides, we can logically frame a continuation candle and look to utilize power of three, looking for shorts above opening price with an invalidation at the low probability level. So there's a great example. So this was, an actual example that I'll talk through in terms of my own trading. I think it was on Wednesday. So you can see that at 6 a.m. So I'm framing a 4-hour candle here, right? So at 6 a.m. we'd already swept the previous 4-hour candle low. Okay, so given that we already taken the previous 4-hour low at 6 a.m., this tells us that we have a 68% probability that we won't also take the previous 4-hour high. So a 32% probability we're not going to take the previous 4-hour high. Okay, see those stats up there. One-sided breach is a 68% probability. Taking both sides of the previous candle is a 32% probability. Okay, so this high right here had a 32% probability of being reached. Okay, so that is just an incredibly strong bias to operate within. So we should just only really be looking for shorts in this environment. So in this case in particular, I will explain in more depth on my Wednesday trade, and Thursday stream. I also talked about it. So we could see here, we've also got the key time frame candle stats. If I expand that, you can see this is all throughout the week. So this is all your weekly data, your daily, your 12-hour, your 4-hour, your 1-hour, your 30-minute, your 15-minute. They're all there ready for you to take. But we also have this indicator here. So if you click that link, you will be able to add the indicator to your chart. To be able to find it, you need to look in your object tree and flick over to data window. Okay, and then you'll see this exact table here. And of course, the beautiful thing about this is, like, if we look at like the 1-hour statistics, for instance, we've got 24,000 candles. Okay, so this isn't just like statistics that we just pulled out of our ass from 20 candles. This is a lot of data. Okay, these are very, very reliable statistics, and they are constantly monitoring every single candlestick. So it just gets, it's just increasingly more accurate, I suppose. So brilliant piece of information to have. True edge. All right, so there is your indicator there. You can do that and you can utilize these for yourself. Okay, next I'm gonna go through my trades this week. So what I've done, and we'll just have a little look at the results there. You can see from the previous 4 trading days, so I've only traded London today, but my P&L for the week has been $26,531.38. Not bad. Okay, so what I'll do now is I'll just click on Monday and I'm going to play through each of my thoughts and how I logically frame all of these candles at the time. So, they're only short clips, but the benefit of these is they're pretty, my thoughts pretty live in the time, except for Monday because I went over just a little example. So I'll chuck that in now and we'll go. What I was looking at on Monday, using the concepts that we've just been discussing. So at around 6 a.m., I was looking at the chart because I was interested in this long. And I'm just going to talk you through that now. Obviously, this is going to be the 4 hour model. So what I'm looking at in this instance is if we just use simple candle framing, we can see we haven't swept out the high of this 1 hour candle, and it's been a fully internal 1 hour candle. Okay, at that point, we also created this internal liquidity. So I am expecting this internal liquidity to act like the draw, and I'm looking for price to sweep out that low and bounce out of this 1 hour internal liquidity. Okay, so if I can get the movement below there, I can look for a long position and look to trade back towards this 4 hour candle. Okay, why am I interested in the 4 hour high? Well, obviously the model is if we sweep 1 hour low, we can aim for 4 hour high. But we can just also see in these 4 hour candles to the right that we've got a really, really strong bullish close here above the previous 4 hour candle. So the likelihood is we are going to continue that momentum and we are going to go for this 4 hour high. So I'm not only framing this 1 hour candle, I'm also framing this 4 hour candle. Okay, so this is like, this would have been so beautiful, but as you can see what happens here, we don't actually take out the low. And what I'm really looking for when I'm looking for this type of PA is I'm looking to get in below 6 a.m. okay, below the hourly open. So why are we trying to do that? Because we're trying to be part of the wick. Okay, so what I was looking for was I was looking for a move to sweep out this low and then some sort of CIA SD or some sort of inversion for me to get in on that price action, have an easy invalidation, and then I could target those previous 4 hour highs. And if we just play that forward, you can see what eventually happened. We go and take out the previous 4 hour high. So I was very right in my idea of framing this bullish 4 hour candle using the very simple concept there. But based upon this internal candle and this internal liquidity here, it just didn't give me that entry I was looking for, and I was being super picky on a Monday morning. So yeah, it is what it is, but it's still a great trade and it's still a good learning example. Apologies, I may have messed up the stream a little bit there, but in the recording it is definitely showing my screen. So if you did miss that initially, then you will be able to watch it back. Essentially, I just talked through a trade I was looking to trade and I wasn't able to actually get the entry I was looking for. I was looking to play the 4 hour model. So I'll just quickly talk you through the next one as well. So you should be able to see this in the stream now. Okay, so moving on, later on in the day around New York, I did actually take this trade, but it was only on a single eval account. I'll just skip forward to New York and I'll show you what I was looking at. So as we go along here, can you see how like close above previous candle high, close above previous candle high? Where do you think this is about to close? Above previous candle high. So this is a really, really good way of just seeing exactly how the market's pushing, because this is pretty much just noise every dip. And you know, how many of you guys probably attempted to short some of these things, or how many people do you think actually attempted to short these small pullbacks? But if you're just looking from this perspective, you can see how crazy bullish this is. And once you're closing above the previous candle high, that's, you've just got to keep expecting that. You know what I mean? It's the old cliche, the trend is your friend kind of thing. So at that point, we're still closed above another high. So, you know, we could potentially expect higher, but we have got New York Open coming. Okay, so I'll show you the trade I took. And here it is, New York. Okay, so what can we see here? Well, we've got these series of 1 hour candles running into this internal liquidity here. Okay, now the expectation is that we will continue higher, and my reasoning was obviously that 12-hour inversion and that naked weekly gap, which we talked about in stream. If you don't know what I'm talking about, there'll be somewhere in the Discord on my Twitter feed. In fact, I'll link it in this document now. I'll link that draw on liquidity there for you. But I had a draw on liquidity higher. We hadn't quite reached where I was expecting us to go just yet. So once I saw New York open, and I'm still framing these candles, Like I said, I only took it on a single evaluation account. I'm just getting in the groove of the week. It's Monday. I don't want to go too crazy too soon. But yeah, this thing seemed pretty obvious to me. So we play it forward, and you just get this huge candle there right out of that. Okay, and then what do we get off the back of that? A CISD. Okay, so big CISD there. So I decided to go in on that. I was in for I think like 3 micros or something. Not a lot. My stop was around here, and I was looking for that naked weekly gap, which I believe was around 360. It was around 360. Yeah, and then I just let that fly. You can see you get that initial volatility, you get the 10 a.m. open, and look what we're doing here. The 4-hour candle. See, 4-hour candle has closed above the previous high there. So what are we expecting? We're expecting this high to just to continue. Okay, so this 10 a.m. there's not really a lot of need to think that we are going to continue down, especially when we've got this higher time frame picture. Okay, so once you start bouncing from these levels, you can see this CISD was indeed a nice order block as well. So you get a nice reaction off that order block, and then we just keep going and eventually hit the target. So really happy with that trade, as a bit of an experiment, I suppose, but it set me on course for the next day, which we'll cover. But yeah, this has been pretty much everything that I've been obsessed with right now, and I think it's so powerful if you're able to confidently predict with really good hit rate what the next candle is going to be. Then all you need to do is use some simple concepts to be able to get in on those positions. Okay. All right, so that was the Monday, and this was the draw on liquidity we was talking about. So yeah, we had that 12-hour inversion, we had that big naked weekly gap. I jumped in on Spitzy's call and we talked about that. So there's the tweet right there. But yeah, that was Monday. That was more of a retrospective look. So going in on Tuesday now, Tuesday I made 11.3. So that was actually my best day Tuesday. So we'll go on London. We'll talk about that. Okay, so I'm going to talk through this trade while it's fresh on my mind. Ran it on a copy trader, so the result was 2K. Really nice start to the morning, especially if you consider that London had only been open for 10 minutes. But yeah, I'm going to go through the whole idea here. So if we just pull over the higher time frame analysis. So on the daily, we've got a really strong daily candle, obviously. So the obvious expectation is we would go take previous day high, but you've got to build in more context than that. So we're delivering out of this naked weekly gap that is obviously no more, now has clothes on. And we've got obviously this 4-hour swing range where we're very high in the premium. You've also got this naked 4-hour gap here, so you've got some nice draws on liquidity lower, and looking for longs in these places from this perspective doesn't look that logical, does it? So you add that to the fact that we've now got this one, we've got this delivery out of this 2 to 2.5 standard deviation. We've ran the high here on the 1 hour and closed below for an EBP. So we've got a nice EBP 1 hour candle. In here, you've got 1 hour internal liquidity. You can see it better on this view here. You can see that. There's your internal liquidity there. You can see you get a really strong reaction from that. And if we look at the 15-minute over here, you can see we've got 15-minute inversion. And then all here, what we do is we produce this 5-minute CISD. So you can see there we close below the 5-minute there, 5 minutes before the open. The opening candle then opens up for London, bullish. Just monitoring that on the lower time frames, allowing that to just play out. We want to see that taken out if it's going to close bullish. Immediately we sweep that high, and we sweep it into this 15-minute gap here. Okay, so as soon as we enter that 15-minute gap, I decide to enter, because if I'm going to look for a trade and frame this bearish candle, which I'm pretty confident in, I know that I'm at least looking at, let's say, just holds the gap. I'm looking at least 2R there, really. Even if I pull all the way to the top, potentially squeeze 1R out. So I was happy to enter immediately in this gap here, because I've got such a obvious idea. I've got the EBP probabilities here, 62%. And I'm expecting that next candle to move down and take out this low at a minimum, and then start maybe running for this liquidity here. As soon as we run Asia low, I'm pretty aggressive on my trail. Just trailing stops. So I get taken out around here, which I'm happy with, because at the time ES was forming SMTs. There's potential targets lower, but just banged on a naked VWAP there. Nice. But for me, using a copy trader with quite a bit of size, I'm happy to just get that base hit in. Okay, so that was London, and we'll move over to New York, which was quite a chunky winner. Okay, so a little update from this morning. This is my day so far, and yeah, pretty happy with this. It could have gone really bad, this, but I managed to get away with it. So I'll just let you know what I've been doing here. So let me just slow this down, because we just got news, and this is very, very violent right now. So let's just slow it down so you know what I've been looking at. We've got, right, so we've had this high taken out. We've closed back inside the range, okay? So as a result, we had this CISD here. So there's your change in state delivery. Okay, so I'm naturally expecting this low to be taken, okay? As we know with our candle stats, it's unlikely, or 27.6% probability, that we're going to take both the low and the high. So I'm expecting a expansion or a move back down towards at least discount, because we're in the premium of this swing range. So shorter favored, we've swept out this major high, and we've obviously swept out PD high as well, right there. So I'm just framing a bearish candle at this point, and I'm looking for it to deliver down. So once we get the open, this is just prior to the open, we get that another CISD there. Okay, so that's got my attention. And then what I'm doing is, if you just look over on the MNQ chart over here, we've got this 1 minute gap just here. So I'm just keeping my eye on this gap here. And when I see, so this was quite discretionary, shall we say, quite discretionary trading, but the concept itself was rooted in a fair bit of analysis. So once I see this bearish gap form here, I'm just monitoring this opening 5 minute candle. Okay, and you can see it's pretty mad. And the way I see this operating, so we've got 1 candle, 2 candle, 3 candle, and the 4th candle. So once I see this little sweep out here, we come back down, and then the next candle closes bearish. I decide to enter around here, stop at those highs, and then we immediately drive towards these lows, and I just start taking profit like a madman, because Tradeovate had basically gone down, and I'm using quite a few Tradeovate accounts. So thankfully I have a trade copier, and on that I was able to just flatten all my positions, because once we got that 5th candle, obviously we got the green close there. So once we got that green close, I'm now expecting that high to be taken out, and you can see it immediately runs back and takes that high out. So very, very quick, very discretionary, but I'm kind of getting exactly what I was expecting in this PA now. I don't think we took that high. No, we didn't. So I was just expecting continuation. So we just play this forward. You can just see how violent this thing is. It's very, very violent. So then we've come for this low here, which is a liquidity target. It was the previous 1 hour low right there, and it was obviously around the 50%, so logical liquidity. And then we bounced like crazy, but thankfully I'm already out of the position. So yeah, that's essentially all I was doing. I was just framing this 1 hour candle to head lower. And we have just opened a new candle here. So yeah, this thing's quite messy right now. So to be honest, I'm just hands off, and I'm happy with the funds that I've managed to extract from the market. And yeah, that's me done. Thanks for watching. All right, so that was Tuesday, and we'll move over to Wednesday now. So you'll see the theme here. I've got like a candle that I'm framing. I'm using probabilities to be with the higher probability. You know what I mean? I want to be in the high probability environment. Okay, so I was happy to take shorts because I knew that the 1 hour high had such a low probability of actually being taken. Okay, so today's Wednesday 26th. I'm just going to talk you through my thought process at the time. So start out noticing this morning we did have this big S&T with ES on the daily. You can see that over here. There's ES's previous day high. NQ proceeded to take it. ES didn't. Okay, but there was a part of me that was thinking we might fade this. If I just pull over this chart over here and look at this one, yeah. So on this chart on the right, you can see that we are in this 1 hour internal here. And if you look over here, we've got this 15-minute CISD. Okay, so we're coming out of this 1 hour internal, and then we've got this 15-minute CISD here. So there was a part of me that was thinking we might fade this. But taking another look at this thing and seeing where we are, it's still super premium. We've got plenty of draws and liquidity lower. We've taken out this major high here, and obviously we've got S&T at the highs. So started to think, right, okay, well, there's good enough reasons to think down. And then once I had a little look at the 4 hour statistics, where have they gone? There they are. So once you look at the 4 hour statistics here, you'll see that we've already swept the previous 4 hour low. Okay, and if we look over here, it says bars that breach only one side, 67.8%. So there's a 68% probability that we won't go and take that other 4 hour high, this one. Okay, so if I'm operating in a low probability environment when I'm looking for longs, it's not ideal, is it? So if there's a 32% chance that we're going to go and take that high, I don't really want to be longing in that kind of environment. So in my mind, that said, right, okay, we're probably going to continue lower. And it was at this point, and I was a little bit late to my analysis because I got up a little bit later today, but I was kind of rushing the process a little bit, but I still got there in the end. But obviously there was this 15-minute inversion here, and I believe that swept out a 1 hour high. Yeah, so that would have swept out a 1 hour high there, and we would have got that 15-minute inversion. So there was plenty of juice on the downside. So I just watched that open in 5 minutes. I noticed the 15-minute a little bit late, and I wasn't trying to get in on a position too soon. I was just looking and seeing whether we would start to show some bullish price action out of this discounted area here, the 5-minute swing range. Premium discount there. We've got that 50-minute CISD. I'm just looking to see if we are going to start looking higher. But then the open starts to move lower, and we start to get this to 2 a.m., which is obviously the 4 hour open. So we look at this again. So that's obviously going to be the 4 hour open. So if this candle is going to turn bearish, which I'm expecting it to do with a 68% probability, then the likelihood is we are going to go below 2 a.m. and anything above was just wick. So with that logic, I managed to grab a little scalpy scalp. So here was the trade. We'd come down into 2 a.m. and bounced a little bit. And can you see right here on the right, on the MNQ, we've got this 1 minute gap. So I was curious to see if we would invert this. But what I did instead is I noticed that we were wicking out of there like this. So I decided to take a little short scalp there with a very, very low risk to reward. Well, very, very low risk, high risk to reward, essentially. So that was the trade right there. I entered around here. My stops was here. Ooh. That was there. My stops were, I entered around there. Stops were there. And I was just looking for this 4-hour low, current 4-hour low to be taken. And then I was just trailing aggressively. So as soon as we run those lows, I just move my stop to literally the low. And then it comes back and it takes my stop out. Okay, so I've literally just captured like hardly anything. But if I put my P&L up there, you can see it's still pretty substantial. So yeah, I'm pretty happy with that. I'm literally only caught like 10 points, but it's really all you need. And yeah, I was confident in the scalp. I had a really, really easy invalidation. And I knew I didn't want to play any longs out of here. So what I've done is I've just closed the accounts out and I'm done for the day. Well, London. Okay, New York. Okay, boys and girls. Right, so just cover the New York Open. You might be able to see here a couple of little executions. Prior to the Open, I took a couple of little scalps and got stopped on the first one for like very, very small. And then I tried it again on the second one, looking at this being a potential like 1-hour expansion. Okay, and then I quit once we took that 1-hour high there. I was very, very quick to hit break even. So I took a little L there, just with I think it was like $100 per account, and then took a break even on the second attempt. So then once I start seeing us run through all this internal liquidity here, and I see that 5-minute get inverted, I then notice this 5-minute gap here. So if you look over to my chart on the right on MNQ, I did actually set a limit order here, so I risked like $250 or whatever, and I got literally tagged into like the absolute dollar, and I added a little bit extra just for some more risk because I really liked the way we were moving around here, especially when I pull over the higher time frames. So pull over the higher time frame, you can see here we had a 32% probability that we weren't going to take out the 4-hour high, and I was expecting us to continue lower once we got below 6 a.m. and start pushing towards this, these lower areas of liquidity here. Even better, when we pull this back over, you can see on the opening 5-minute candle, we got a bearish bias. So all this while over here, I'm looking at PA as very, very, very likely to come and take this low. Okay, so I'm very comfortable in this position. I take half the position or 2/3 of the position off around here. But at the same time, I also entered a mini contract when we get this little tiny 1-minute EBP there. So I entered another little mini there. So I was in for like quite a few contracts. And yeah, flush through, take a bunch of profit, and now I've left 2 micros as a runner, just in case we do continue to flush. And you can see I've just trailed my stops as well. I'll just see. I don't think I'll be able to get an update of my P&L while I have a active trade. So just give me a moment. Da, 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 yeah, there it is. So that's what we're looking at so far. So, so 1, 2, 3, 4, 5, 6 accounts. 7, 1,400, 2,700, 4,000, 5,200, and we've still got runners to go. It's roughly 5k from today. So really, really happy with that. Same principles as we've been using and we've been discussing. We're just framing candles here. Once I was pretty much set that we were going to be in a 4-hour bearish candle, pull this over. For me, it made sense to just hold bearish gaps. So I'm looking at this 4-hour candle here, and I'm just expecting expansion at this point. Obviously, we've got that big SMT Asia that happened in Asia, big SMT here at daily highs with the NQ and ES. So ES goes and runs those highs. So you can see that ES starts running those highs and we start forming all this SMT over here. There you go. And we're just expanding away from that now. ES has begun to catch up. So when ES takes this low here, I'm going to trail a little more aggressively with my stop, which is over here. See, that's now ticking up quite nicely. Nice to have a runner, isn't it? So I'm just going to trail. So like there. So what's that? 220 ticks. So with 2 micros, what's that? $1. So yeah, so locking in like $200 there. And yeah, very happy with that. And that's Wednesday. We're almost there, guys. We're almost there. So Thursday, I only took a London trade, and today as well, I only took a London trade. So we've just got a couple more videos left. Okay, so 27th of March, Thursday, short the London Open. Really, really nice trade. And I'll let you know while it's all fresh in my mind what the logic was here. So we opened up London, and you can see here this hourly candle is this one here, which was 2 a.m. or 3 a.m. Sorry, if you mess around with daylight savings. Yeah, I know it annoys me too. So you can see, look, really, really aggressive close. We close below the previous candle's low. So I'm expecting another bearish candle. So I'm biased to the downside in my next 1 hour candle. So the first open of London. So once we get that move up here above the opening price, I'm looking to be part of this wick. Okay. So once that happens, you see we come up, and what do? We form a nice little 1 minute gap. Okay. So really, really simple. I just look for this to start being traded through. I do enter a little bit early. I don't know my precise, does it say if I click that? Yeah, so 20.07175. Okay, so I entered about here. So yeah, probably got really bad spread there. So I did enter during this candle as it starts to come back below the London Open, because I'm anticipating that this is just going to be a quick move up before a move down. Okay, and I'm going to be part of that wick, and I'm going to be part of this bearish candle. Okay, another big factor for this is the fact that if we pull over this chart here, we look at the 4-hour chart, you could see the previous 4-hour high or Asia high has a 32% probability of being taken. Okay, so if I'm going to be longing in this area, ideally, really, I want to be playing that internal to external. And I'm trading a 32% probability environment at that point. So, it's a low probability trade. So the fact that this 4-hour candle had already taken the low, so we go there, I think it is. It's going to be around 20. Yeah, so this has already taken that 4-hour low. So the odds of continuation are 68%. Okay, so taking this low and then that high is a 32% probability scenario. So what I'm looking to do is I'm looking to just play on side with the higher probabilities of this 4-hour candle and look for that move lower. You've got some nice confluence here. You've got this 1-hour inversion, which we get at 3 a.m. And then you've also got these SMTs. Not this one. Where's the other? This one. Yeah, you've also got SMTs here with ES. NQ look like the weaker one, so you can see this is much deeper into its discount now. ES is not so far. We've just only really tagged into this 50% and that logical liquidity there, which is around where I started taking profit. Again, I just trailed very, very aggressively. And that was the result. Really, really nice, quick trade. I'm not looking to be a hero. I'm just looking to get my base hits and gather that profit. So we run back into this 6 p.m., which is the daily open. So what we could be looking at next really is this just being that daily wick there, and this now looking for a bearish daily candle. If we go over to the higher time frames, this one, yeah. If we go to the higher time frames, you can see we have had a really, really aggressive move on the daily. Look at this candle here. So really, really aggressive move on the daily. So we are expecting this next daily candle to be a bearish candle, because look where we close in relation to the previous day. Okay, which means that we'd already swept previous day low. So if you look at this, we'd already swept previous day low here. So that means that in this scenario, there's a 34% probability that we'll take PD high. Okay, so I was interested in shorts higher, but I was able to just grab a scalp at the open because I'm able to read the lower time frame context as well, and that was the result. Another really great trade. And then finally this morning. Okay, and that completes the week. Nice timing here. I'm already out of this short, but you can see here we've just had a 5-minute inversion, and we've got a 68% probability of running for this low. But I'll tell you why I'm out of the position. As you can see, well, you can't see because my executions have gone because I've logged out of TraderVate. But my position was essentially looking at, if you look over to the MNQ on the right, you can see these series of closed candles that take out this high. And then once we get that nice move down, I enter around here, stop at the high, and then I'm looking for this 1 hour low here, which for about a 2 hour, which is 68% probability for a continuation candle, which you will have just learned. Yeah, I'll tell you why I jumped out of this. If we look at this 15-minute swing range, you can see how low we are in the discount. And what I used for my delivery was actually like a very low. Right, it's tricky to see this, but you can see this 15-minute gap here. See how it takes it on ES, but it doesn't on NQ. So I know there's a little bit of S&T going on there. So that's what gave me the confidence to enter once I got that nice candle there. You can see that nice CISD on the 1 minute there. So I wasn't feeling great about this. It was a little bit sketchy, but in my journals, I kept repeating the same message to myself. I even wrote it out on a note. It's just respect your risk. So as soon as it got to London Open and I see that I get a nice reaction off London Open, I was like, right, okay, I've made a decent amount of money there. I'm just going to do it. I'm just going to take it and leave it and just be gone with it. That was just my mentality today. It's just a few things were just, maybe I'm a little bit tired, things like that. But you'll see here on the day P&L at the top of my lead account, it says 73. That was because I made a little mistake with my copy trader this morning. So, you know, clearly I was looking at myself and thinking, right, okay, you're not quite on point. So, you know, just take the money, run, get your piece, gone. You know what I mean? Like, even though we've just had that 5-minute inversion, you can see now we're bouncing from London Open. The fact that we've already dropped so far and I'm short and so low, that's just what made me feel a bit iffy. Okay. We still have a 68% probability that there'll be a continuation lower. That's purely based upon the probabilities of closing below this low right here. If we do take that low, this high then becomes a 28% probability. Okay, so if we do take that low and then we come up higher, then you've got another potential opportunity to, you know, get a high probability short. And yeah, that was it. Simple enough. And yeah, thanks again. And that's it. I know it's crazy because like they're not like Hollywood trades. They're not like incredible like 500 points, a million ticks, you know. But it's funny. I saw a tweet about this morning, and it's like fifth. Hang on, I'll actually just find the tweet. 1 second. Not even 100 hour in a week. I'll just find the actual tweet so I don't butcher it. 50% profit on $1,000 is $500. 5% profit on $100,000 is 5K. Don't chase bigger returns, chase more capital. Okay, so it's funny because previously I'd take way more exciting trades, huge trades. But what I'm doing here is I'm operating in such a high probability environment. I'm able to take just like these nice and easy quick scalps, but I'm operating with such high confidence and high probabilities. You know, I'm able to extract money and quite a lot of it in the market because I've got more capital. Okay, and that isn't me telling you to go and get more capital because that isn't a good idea. Because I've got to the point where I can now handle that kind of capital. Okay, so that's just the next evolution. And if you go into my update channel in the Discord, you'll see my feelings on this topic anyway. But yeah, that was it. That was the 27K week. That was every trade I took, pretty much immediately after I took it. So you had my live thoughts at the time. And like I've noted here, some of these trade entries are fairly discretionary, but they are guided by solid probability-based principles. Okay, so if you're looking for more mechanical entry models, you're probably going to catch less trades. But all the tools that you're going to need for that kind of stuff, I've already taught you anyway. So everything you need here is in terms of candle framing. So how are we going to predict the next candle? How are we going to take a trade and make sure that we are aligned with the higher probability environment? Okay, so a few little future topics that we will discuss, because I didn't want this session to go on too long because we've already hit the hour mark, is we're going to utilize standard deviation pulls for targets. We're going to look more into premium and discount, mean thresholds as well. And then we're also going to talk about expansion and time frame alignment. Some additional resources for you here as well. I've got the time modules, obviously. So if you go and click on these links, it'll take you to the Discord, which will be the two first time modules where we go over the 4-hour strategies. That was the daily bias game we played on stream, and these have been my streams from this week. Thursday, I gave away a whole bunch of, what I've talked about today. So that's probably the most in-depth one, but you can see us talking about these concepts all the way through. And then obviously you've got the Spitfire entry model, CISD things, and obviously the 5-minute bias as well. But yeah, it was indeed an intense week, and yeah, that was it. And I'll share this with you all now, and I'll get it onto the educational library, and I'll stop the recording, and we will take questions.